Long-term sentiment of natural gas is bullish, while the oil is actually negative.
In the last 12 months, the administration has either authorized, backed for between $500 billion and $1.2 trillion for data center and AI initiatives. There is no revenue in AI yet. It is a race to see how much energy they can capture. All right. Welcome back to the Rice Report, everybody. Eric Rice, your host here, of course. Thank you so much for joining us each and every episode. We try to bring information that's relevant in the areas of money, politics, faith, things that I really think that all of us should be talking about more, having deeper conversations, having controversial conversations with people who think differently than you do. In the end, what you find out is all human beings actually desire the same thing, no matter what political party they're on. They want clarity. They want a good life. They want to be able to provide for their family and just live and have freedom of consciousness. Today, we're going to get into the markets a little bit, and I brought a friend of mine on here, Michael Tanner, who's an expert in the oil and gas space, Sandstone Consulting. I used to work with him in the oil and gas space. He's brilliant, and I want to be able to pick your brain today about a market that has very little love on social media. As an example, as you know, I do off-grid energy creation through natural gas or flare gas to mine Bitcoin and create electricity. So I'm very tied into the data center space. So I hear a lot about Bitcoin. I hear a lot about gold and silver, which are going crazy as we're filming here on January 30th, about 1:30. So the markets are still raging. Silver is down 34 to 36% in a day. Natural gas just doubled in the blink of an eye. And that's the market we're going to get into because I think it's the most interesting market. I think everyone talks about asset classes and they talk about the stock market, bonds, Bitcoin, gold, silver. These are all versions of money, some better than others. I think Bitcoin is the premium version of money at the end of the day, but I think people will flee to gold and silver. None of that is possible without energy. You cannot have a stock market. You cannot run a company. You cannot mine Bitcoin. You cannot mine gold or silver without energy. And a recent study that just came out from me using AI. So deep dive there, Michael. I used Grok, deep dive. In the last 12 months, the administration has either authorized, backed, provided land, policy, or capital for between $500 billion and $1.2 trillion for data center and AI initiatives in collaboration with private corporations, which should scare everyone, by the way. But that is the tip of the iceberg. That is expected to go 5 to 7x by the year 2030, meaning we are going to spend between $6 and $10 trillion building essentially a surveillance state. There's no other way to put it. They'll sell it to us, of course, Michael, and that it's useful and productive and everyone will be happy and you can just, robots will fold your clothes and everything will be great. But that is what's happening. And most of these data centers right now are operating on natural gas. I've been very bullish on natural gas for a year. It's finally starting to pay off, but give us a breakdown of the natural gas market right now as it stands.
We were just talking about this. I think for the first time in my career, the long-term sentiment of natural gas is bullish, while the long-term sentiment on oil is actually negative. Usually they're reversed. You know, natural gas, when you get into the industry, they tell you natural gas, that's the widow maker. Well, because it makes a lot of widows because people go broke and end up dying because they've invested their lives trying to figure out natural gas. Because it's an absolutely insane market, both from kind of like the financial side of it, but also just the actual energy production side of the business. So really, it's the first time that sentiment has sort of swung towards the natural gas side. And you're absolutely right. I mean, I was watching Chevron and Exxon earnings this morning. Both Darren Woods and Mike Wirth went on CNBC and Fox Business. And I think 3 out of the 5 questions they got asked was about off-grid power generation and how hyperscalers are coming directly to them to attempt to wrap up all of their power needs. And so I think it's a wildly dynamic business right now. As you talked about, we're recording it as the end of January. We all just went through, or at least the South and the Northeast areas just went through a massive deep freeze. If we can call it a deep freeze, I guess. I'm from Colorado, so I really didn't count freeze. It was great. The roads.
It was certainly not the storm of your lifetime. It was certainly
absolutely
not that.
Well, it's great. Nobody was on the roads. I could get to work and not have to worry about traffic. It was awesome. But we did see natural gas spike tremendously. It's sort of fallen back down. Now it's currently trading about $4.30, still way above what that 5-year average is. So it's really dynamic time in the market. I think there's a lot to get into. And I think the perspective that you bring specifically from what you're doing in the natural gas in the off-grid mining space is fascinating, and that is going to be a great conversation.
Yeah, and by the way, you guys should check out him and a friend of mine, Stuart Turley, both friends of mine. They run a great podcast on the energy space. So if you want to be kept up to all the latest things that are happening, Energy News Beat, download it, listen to these guys. They bounce off of each other very well. They're very entertaining for an energy podcast, which are normally literally a snooze fest. But great information along with some good entertainment. As you can tell, there's no lack of energy with Mr. Tanner here. He brings it all on the table. So, Michael, this recent spike is unexplainable, and most people haven't. So, what is your best thought process to see? I think we looked at a 60% jump in natural gas in 48 hours, which does happen. Like, it's not an unusual thing in the marketplace. But what's driving it this time? Is it cold weather, data center demand? What are we looking at in this recent jump?
Well, that huge spike from where it was at, the high threes all the way up into the sevens and eights, that's absolutely just to do with the cold weather spell that we happened. We had over 50% of the country theoretically in this deep freeze that actually got really bad in the east. It maybe wasn't as bad in the south as they thought, but still the majority of the country, specifically where natural gas is used to power the grid, was wrapped up with this deep freeze. So that's that big spike. So nothing real to explain there. I think really when you take a step back and just look at a long-term chart of natural gas, again, for the first time in really my career, natural gas is pointed bullish. And that has a lot to do with what you just talked about, which is the demand for data centers, the demand for off-grid power, and attempting to really manipulate and go around the traditional grid that we've built. And you know a lot more about this than I do, but the demand coming from data centers to suck up energy is becoming insane right now. You just talked about the amount of capex that's getting dumped into it. I mean, you look at the recent valuations, Anthropic, XAI, OpenAI, they're raising hundreds of billions of dollars combined. And most of that money outside of salaries for their employees are getting dumped into building out these data centers because and also the infrastructure around it. But to power these data centers, you need an absolutely big amount of energy. We've seen some folks try to go into the nuclear space. I'm actually interested in your perspective on that because we saw, it was 3 Mile Island get bought up by Microsoft. Is that correct? What was the nuclear plant that Microsoft bought trying to use that? Was that 3
I think
Mile
you're right.
Island?
I think it's 3 Mile Island. Yeah, there's also American Nuclear is out there buying or building a small reactor in Indiana. There's all kinds. So nuclear is an interesting conversation because your average, like a true traditional. First of all, let's dispel some myths because that's what you and I do all the time when we're working together. When you see smoke coming out of the reactor site, that is not smoke. That is steam. Mm-hmm. A nuclear reactor is essentially a large boiling engine. You're turning the turbine with heat that's produced through the uranium to heat water to spin a turbine to run a generator. That's what a nuclear reactor is. These things are very expensive, billions of dollars, 8 to 10 years to build. I mean, they're using AI right now to figure out how to scale these things faster. But nuclear, I'm fascinated with nuclear. I think we've been, but everything works in a transition. So you can't go from petroleum to or coal energy for the grid directly to nuclear. It just doesn't work that way. So that's why natural gas is going to be right in the middle of this transition phase, because behind nuclear, it's the cleanest form of energy. Coal is very dirty, but nuclear by itself is as clean as you're literally boiling water and you're containing radiation when done right. I mean, of course, there will be a rush job that breaks down right at some point. But this barrage that we're seeing right now, I don't think the natural gas market slows down for at least a decade. There just simply isn't enough energy. There's not enough grid power. The grids that you're looking at, especially in the East, some of those grids are 75, 80 years old with very few updates. I mean, they maintain them so they work, but you have to feed that beast. So we're authorizing more coal, more solar, more wind. Obviously, more gas projects are getting approved, although we're still going through a lot of bureaucracy to make that happen. But this rush for energy has nothing to, the off-grid world is where you're going to see the biggest impact in these data centers. They are going to build fully vertically integrated spaces that don't have revenue for 3 to 5 years. I'm going to remind everyone, there is no revenue in AI yet. Now, they are begging companies to use their AI platforms on subscription model, right? They're literally begging some instances because it's not ready for prime time yet. That'll happen in the next 18 to 24 months. But we're already seeing the layoffs and all that kind of stuff. And in between, in between now and then, it is a race to see how much energy they can capture. So in that natural gas market that we're talking about today, what do the drill counts look like? How many are we preparing adequately for this? Because what I see in the market right now is that they're stealing gas, and I don't mean that literally; it's more metaphorically. So I just talked to a guy earlier that got $1.5 million buyout for a pipeline. Straight up $1.5 million. Here's $1.5 million wired to your company. And they're going to dump a couple $1 million into diverting the pipeline into the market, from the market to their facility. Like, they have big money. So you have big corporate money, oligarch money, government money. There's no limit to what they can spend for these infrastructure build out. But is there enough natural gas being produced to meet the demand in the market today?
As of like recording this podcast, yes, because I'm an economist and we always say that today's demand always matches today's supply. We live in what's called the marginal supply equals the marginal demand. I think what you're getting at is in the future, if we forecast out all of this CapEx spend on data centers, will the demand that in order to make those data centers profitable, they're going to need to consume a heck of a lot of energy in order to actually generate the AI models, the tokens that are actually what turns and gives a hyperscaler or an AI company profit? And the answer is no. And there's an interesting little thread to throw in here. Travel back in time to President Trump's first term. What was one of the big things that he got laughed off the stage when he went and flew over for his first time to Europe? What did he tell the EU? Hey, you have to get off Russian gas. There's a storm coming. Watch out. At the flip of a switch, your gas can be turned off. Well, then during Joe Biden's presidency, what happened? Russia decided to invade Ukraine, and guess what? The EU freaked out and said, "Oh, we can't use Russian natural gas." Somebody bombed Nord Stream. We can go, we probably the CIA, but for posterity's sake, we can say it was the Ukrainian SEALs. But the EU got cut off for gas. So the United States, in response, decided to start building massive amounts of LNG export facilities. And that was something we really hadn't invested in, because up until now, we had a plentiful ability to use our own natural gas. Well, all of a sudden, if you go back 3-4 years ago, natural gas was trading at really historical lows. When you think about the amount of inflation that has come from the quantitative easing that happened over the last 15 years, sort of on a dollar for dollar basis, really, specifically on like a gold denominated or a Bitcoin denominated basis, natural gas was at historic lows. So there was no incentive to spend, tens of billions of dollars to build out LNG export facilities, when all it was going to do was going to get shipped over to Europe, and you were going to have to compete with Russian LNG, which was extremely cheap because Russia actually has more gas than they do oil, where in the United States, we're about, I don't want to say 50-50, but we have a lot more oil than, Russia, which is a primary gas-based hydrocarbon environment. So, well, now all of a sudden, when Europe gets cut off from Russian energy, well, now all of a sudden the differentials, or the price for LNG or natural gas in Europe, spikes tremendously, all of a sudden making it extremely cost competitive to actually build out these LNG export facilities, put natural gas, cool it to the point where it becomes liquefied. LNG just stands for liquefied natural gas. It takes talk about energy. It takes an incredible amount of energy to liquefy natural gas, and energy is just a cost. So when you hear us talk about a lot of energy, think a lot of cost. Cool it down, put it on a ship that's basically a floating bomb. So if any leaks happen, you're gonna talk about an explosion there. Send it across the sea and load it into an LNG import facility, and then sell it to that grid. That is generally a huge cost. But now all of a sudden, if it's $11, $12, $13 an MCF, and the cost
32,
or whatever it's the long-term sort of average is, now all of a sudden, instead of just competing, and so that's, to bring it up to speed, that's sort of the current environment right now. So forecasting that to the future, the EU's decided they don't want to go back on Russia. Russia's the big bad wolf. They don't want to do business with Russia. We can debate. That's a whole nother conversation that we can have about whether or not that's a good thing or bad thing. Point of matter is, EU has basically sworn off Russian gas, or at least they're claiming to do that. So that's the mindset that the market's going to operate under. Well, where's Europe going to get their gas? They're, natural gas, drilling for oil and gas, that's bad. Climate change. So they don't want to do it. They'll happily outsource it to their neighbors down in South America. They'll happily outsource it to anywhere else other than themselves. So someone's going to have to pick up that mantle, and then they're going to have to import it all. And most likely it's going to be imported from the United States. So you start rolling this out into the future, and why I 100% agree with you on your long-term bullish thesis for natural gas is not only are these large scale data centers as you've mentioned, sort of stealing natural gas, going around the grid, pulling it off grid. Not only is there companies trying to do it the right way, which is extremely costly, we're now competing. Both of those end users are competing with LNG in Europe, which for all intents and purposes probably is going to be, if not competitive, if not more competitive than these data centers, because you could eat the margin. I mean, this is something at our old company, me and you would talk about all the time. You would come over into my office and be like, we need to be doing off-grid Bitcoin mining. And I would say, great, hook it up. And we would have conversations. It would be great. And then we would go before management. And, you know, I love oil and gas executives, but every single oil and gas executive I've ever talked to, all they say is, well, what am I getting for my natural gas? I can get it for $3 here. And it's like, guys, you're missing the point. The point is not what the net back is per MCF. What you need to be worrying about is what's the overall cash flow of the business. And maybe you take a slight loss on the natural gas, but you're going to make it up way down the road by participating in something that's a much better currency. Again, whole nother conversation we can get into. But the point of the matter,
very common turn down, by the way. Like everyone turned it down. So
everybody turns it down, and somebody will figure it out. It's another conversation we can another thread we can dive down. But just to kind of put a bow on this, I think there's competition for natural gas is going to become wildly competitive in the next 5 years. And it's not just the hyperscalers and the data centers. They're a huge chunk of it, but in my opinion, no one's talking about the beast that's coming, which is all of these LNG export facilities, which are set to open this year. We saw Freeport reopen. Phase 2 and Phase 3 are about to open up. And now all of a sudden in the Permian Basin, we've got a massive pipeline infrastructure build out. All that's going down to the LNG export facilities, which again are not going to the United States, are going to Europe.
That's right. Yeah, I still remember the day that the Nord Stream blew up, and I got into the office, and somebody goes, "Who do you think did it?" And I go, "We did, probably. I mean, certainly we did. Our intelligence, MI6, all of them did it to create the most gangster move of all time. Oh, you don't have gas? Oh, well, we can actually drill it here for $2 an MCF if you guys will buy it for 30." And at that time, there were 4 export companies that were all, government. They're not government agencies, but they work directly underneath the government. So that's how you saw the 2022 midterm election rise in GDP. By the way, is because we were buying American natural gas at $2 and selling it between 11 and 32 into Europe, and that's literally the saving grace for the midterm elections during Biden's era. Very interesting time in history. By the way, General McChrystal was caught on camera saying that that's exactly what happened. So about 6 months after I said, remember, everybody, I was like, "You're crazy, Eric." No, General McChrystal was caught on a hot mic saying that's exactly what happened. So can that repeat itself? I don't know. Maybe. I mean, it seems to throughout history. But when we look at Europe, the only saving grace they have is they have a massive gas field in Germany that they simply will not open because they don't want to damage the environment, while their people are burning wood in the middle of the winter to stay warm. In Germany gets cold. It gets real cold, and they are not turning it on. They shut down their nuclear power plants, which can be spooled up very quickly, like 4 to 6 months. They can respool them up. Michael, I think we go through this rush where there's like this 6-year to 8-year run where natural gas is the play until nuclear infrastructure is embedded globally, because that's the only way Europe's ever going to compete in the AI space is by turning on all the nuclear power they turned off and building new, which they don't have the money to do. So we're looking at a 2-world player system, are we not? Are we looking at really like the United States and all the land that we'll seize? Like, let's just call that what it is. Like Greenland, there's plenty of gas. Canada, tons of gas. So we'll have that providing maybe this hemisphere, and maybe Russia, whether they want to use it or not, they're going to have to use that Russian gas at some point.
I think they'll eventually have to, because at the end of the day, people aren't, no world leader in the EU or no EU leader is actually going to just let their people die. Maybe they will. I don't know. I don't go down.
Don't put it past them.
But maybe they will. Maybe they will. But I think why I'm not as bullish on, so you say 6 to 8 year run for natural gas. I agree with you. Now, I don't think natural gas will ever go away. I'm not as bullish on nuclear as you and I think Stu are. And I think a lot of words in the United States, I think it just comes down to regulations. I think if we can change the way nuclear is regulated, I think nuclear has a real shot in the United States. I don't think nuclear is going to make it in Europe for the same regulation reason, but they're a lot more hard-headed than that. Again, they would rather shut the nuclear plant down and have their population use wood to heat themselves than they would go in and turn on the nuclear facility because of what, climate change? I mean, it's just unbelievable considering exactly what you talked about. The smoke coming out of those nuclear facilities is just steam, folks. They're just massive steam engines. So it just boggles my mind that it takes a quick Grok search to figure that out. And people aren't even willing to do it. You can actually make Grok a little bit of money if you search that, and they're even unwilling to do that. So I see natural gas as honestly entering a new era of being the primary and a more valuable commodity than it ever has. And I don't necessarily want to go so far as to say natural gas will become on a sort of a BOE, what we would call a barrel oil equivalent basis, as the new fuel that everybody is going to be going after in the business, because on still right now under the current fiscal, I don't want to say fiscal regime, but the current fiscal policy, oil is still worth more on a BOE basis than natural gas. But there are a lot of people, and I think they have some great points. I wouldn't go so far as to agree with them, but there are some people that would tell you where it's going to flip, where natural gas is actually going to become the target of a lot of companies, especially in the upstream E&P space where I work. It's going to become their main focus. And that there are some, obviously, you've got your Marcellus shale companies, the EQTs of the world, the CNXs of the world. You've got your Western Haynesville and your Eastern Haynesville, your Comstocks of the world, your Aethons, but they're far and few between relative to the rest of the industry, where they really specifically, if you operate in the Permian Basin, you think of natural gas as an expense, which is ironic considering the era that we're about to move into. And that's also another thing that might be interesting to get into, is sort of the regional biases that we have. If you produce gas, if you're an oil and gas producer in the Midland Basin or the Delaware Basin, the two primary sub basins within the overall extent of what you hear about the Permian Basin, gas is an expense there. It's a cost center. You don't want gas. I saw 3 jibs yesterday, which are just expense reports from a well. You paid to dispose of your natural gas. And I say dispose of it because they took it and used it for something, but there's so much excess gas and nowhere to put it that you actually net back a negative price. And so regionally, some of this stuff is going to have to get worked out, or else the paradigm is going to be absolutely insane.
Yeah, the recent research I did was every year we burn off 1.31 billion cubic feet of ethane or of ethane into the air, so flare gas. Mm-hmm. So just for the audience out there, the fractionation plant model, most people don't understand that natural gas is pulled out of the ground, it gets fractionated, meaning it's broken down into the anes, propane, ethane, and then it has different uses. And that's for people who are using it. Most people are just literally flaring off gas to get oil. That is such a reservoir of commerce, of international flex. Like if America actually started incentivizing these oil companies to capture that gas and sell it properly in the market, even in small amounts, we become a very big powerhouse instead of burning it off. But Michael, run through that, because the waste energy in the oil and gas industry is actually an area where the critics of oil and gas have been correct. So there's a lot of nonsense, right? Like fracking destroys the planet. It's just water and sand and pressure. You can drink frack water. It's not like a poisonous thing for the environment. But we do waste a lot of gas. We do burn it off, or we use it on site for something else. Walk us through like that excess that exists in the market.
Well, I think you bring up a great point, because I was going to mention, I think that if you really want to see change when it comes to investment in infrastructure to build out natural gas pipelines in order to sort of get rid of this crazy regional bias, it's honestly President Trump could do it with the stroke of a pen in executive order and basically say you are required to pay royalties on any gas you flare on federal land, because 90% of the land that's drilled in the Delaware Basin, which is the most prolific part of the Permian Basin, is on federal land. And pretty much everywhere in Wyoming, which is the Powder River Basin, which has gone up, is on federal land. Right now, you basically, there's some convoluted rules. You can't flare for more than 48 hours, but you don't have to pay royalties on that. So companies aren't incentivized to invest into building out the infrastructure, getting creative with Bitcoin mining, or do all this other stuff to avoid flaring. What they're doing is just saying, well, we're flaring because we don't have to pay royalty payments on. You know how much money, like you said, that however many
1.3 billion. Yeah.
You know how much money you know how much lost royalties for the federal government? You want to talk about you want to talk about something maybe that might be better than tariffs, and we don't need to get into a tariff discussion here, but that's a easy, simple rule that you could just flip with a switch, and it's going to cause some aches and pains for a few years. But when it all shakes out in the end, you're going to have better infrastructure. People are going to plan a lot better, and you're going to have a more abundant natural gas, which keeps prices, at least for the end consumers, low. Because at the end of the day, Trump has on masse at the final overarching level, President Trump is right. Energy prices drive inflation. And if you want to lower inflation, the easiest thing to do is start with energy prices, because its tentacles reach all throughout the economy. Food prices have a little bit to do with energy costs because of the cost it takes to take the chicken from the Tyson facility in Ohio and get it all the way to Whole Foods down here in Dallas, where we're sitting right now. So energy is one of the few places that touch every single piece of the economy, sort of like labor. So he's got it right on a whole level. If we got to lower energy prices, that lowers inflation, that makes everyone's lives better. Well, the problem is the way I think he's going about doing that is screaming drill, baby, drill, which I think is anti-productive, if only because oil and gas companies aren't stupid. They're not going to do things inherently that don't make them any money. So if by drilling for more oil and gas right now actually lowers the prices, and we're really mainly now talking about oil, no one's going to do that. So what you've seen, you asked about rig counts. Rig counts have fallen precipitously since President Trump took over. Why? Well, because the margin is getting squeezed out. There's less and less available, what we would call tier one acreage available, that can still turn a profit at these prices. Oil has spiked now over to 65. It's probably a lot to do with what's going on in Iran right now. So,
100%, yeah.
Yay! Another new war we'll get bogged down in for 20 years.
Don't worry though, Michael. We're going to steal the oil from Venezuela, and it'll all work out fine.
Absolutely. I'm waiting on my draft papers. I'm going to end up down there. Stu and I we were having a great discussion on that yesterday. But point of the matter is, if oil is take away the geopolitical risk, let's say oil $60 to $62 right now. There's not that much available inventory that can be profitably drilled at this point. So companies are not doing that, and rig counts falling. So when you look on the natural gas side specifically, if you want to encourage more natural gas production, and you want to encourage more pipeline build out, you want to encourage the ability for natural gas prices to not go on a 6 to 8 year run, which I actually think will have a worse effect on the economy than if oil prices jump to 100. I firmly believe that high, if we saw $6, $7, $8 natural gas, inflation adjusted, obviously, because now we have to throw that in. I hate that we have to throw that into every conversation, because we've just printed money for 20 years and absolutely wrecked our idea of what a dollar is. But again, that's a whole nother can of worms we can go down.
We'll go down it.
No, and I think it's important. The fact of the matter is, if we see $6, $7, $8 natural gas inflation adjusted, that's going to wreck the economy, I think, more than oil, because natural gas is what, my AC just flipped on. Well, that's powered by natural gas. That the electricity was generated by a natural gas generator that was then sent down the pipe. It wasn't generated by solar. It wasn't generated by wind. Maybe a little bit of it was. I try to
1.9%.
I hate here in Texas how when you go to sign up for your energy bill, this is an aside here, I always choose the one that doesn't have solar and wind. They're
Always.
like, oh, go complete green. I'm like, I want the opposite of that one. Can I have the one that's all natural gas, please? Because I'd like to stay warm if it ever gets crazy. Green Mountain Energy.
Staying cool is more important here than warm.
Absolutely. It just kills me.
No, 1.9%. That's the number of solar and wind add 1.9% to global energy after $20 trillion in investment and subsidies. Great job, guys.
As Stu always tells me, what's the lifespan on a wind farm? It's actually not that much. Lifespan on an oil well is actually, 15 to 20 years. Yeah, there's some, and it's actually a lot easier to clean up the reclamation on an oil and gas well, if done properly. It's actually a lot easier than wind, and that's another rabbit hole we can get down. But just to kind of put a bow on what we were talking about with the flaring, I think that is a really interesting piece of legislation that could happen. Now, I think what a lot of companies and lobbyists are saying is if you do that, you'll effectively shut down oil production in the short term, which will cause oil prices to spike. And that sort of is a double-edged sword, kind of goes against what President Trump was speaking about. But if we're thinking long term here, it probably is actually the best way to sort of almost inject change into an industry that will only react to new regulations.
Yeah, and I think you're going to see a lot of the flare companies. I mean, we get calls from them a lot right now. So a lot of them are looking for, instead of flaring, how do we turn it into Bitcoin and add that into our asset balance, which is, it's coming. Like that's coming. I think Chevron's already doing it, or Exxon is already doing it. Let's look at the pieces they've put together. So the LNG export stuff is very interesting. Now, here's where I think it could balance. And by the way, I'm just going to preface this by saying our energy director, energy secretary, Chris Wright, came out last week and said Donald Trump is no friend to the energy sector. Like, that was a public statement made by him, because drill, baby, drill has been put very far on the back burner, though it was the number 2 item on his campaign. So the border and drill, baby, drill, those were 1 and 2. 1 was taken care of. I applaud that effort. I call balls and strikes, as you know. Like, I very much applaud the fact that immigration is down 89% in the last 12 months. However, nothing has been done on drill, baby, drill, except for some, depreciation tax in the big, beautiful bill. But here's what I think. And I just asked another guy in an interview this, if I'm the energy secretary, I'm going to go to Trump and say, here's the plan. Flaring is a waste of revenue, of tax dollars, of global power, the ability to assert our powers by saying we have more gas than you. That's absolutely a flex on the grand scale. So let's subsidize the infrastructure, right? So if you don't want a subsidized infrastructure to capture the flare gas and either turn it into a product to sell in the market or electricity for the local grid, then you get penalized. I think that's a great complement to that. But the export is also there, right? So we have to keep our energy prices low here. But the strange thing is, oil and gas is very much asymmetric to general consumer economy. So the more money oil and gas is making, generally the more expensive the general consumer's life is. That's how it works, right? If you're paying more at the pump, the oil and gas companies are making more, kind of. The gas companies are making a lot more. But the higher the price of a barrel of oil, the more money a oil and gas company makes, which means that you're paying more at the pump. How do you build that trade-off? And it's going to take a very long time to build infrastructure. We need like 9 new refineries at a minimum of $18 billion. There's so much to build to drill, baby, drill, to be vertically integrated. You're looking at $750 billion over a 5-year period to actually build that here. So let's throw that off the table. That's politician speak. But these LNG ports could be a center of profit. And I think what's happening in Europe, from, as you know, like, I don't believe there are independent nation states. I believe that there are a group of people who control all of the politicians there, and they play chess with the world with both hands. So if I'm them, the way I look at creating a win for America is I say, okay, we're going to use the American gas here cheap, and then take the model from Nord Stream, where Europe they're screwed. There is no saving Europe. There is no saving Europe. And are they worth saving? That's the question, I think, at the grand scale.
I don't know if it's worth it or not.
Yeah, I don't know. I mean, we're going to, because they're human beings, but and they're profit centers, right? So you have to look at it from that perspective of the controllers of the world. So you use these LNG ports, you keep gases high in Europe, you continue the rhetoric to not use Russian gas for a few years. Russia starves out. Europe pays a premium from American gas being exported, while our flare gas and excess gas is used in country to keep our prices down. That model from 2022, which I said, I called it literally within 24 hours, everything that happened. But the interesting part about it is, the more I think about it now, the more I'm like, was that a beta test? Was that a beta test for the model that we're in? Like, think of that. If you were a gas driller, you're drilling for gas, 30% of your supply is going to America for a couple bucks, right? $2, $3, $4, $5. Then you're sending 70% of it overseas where they need it more than we do, and you're getting $10. Because there's no more middleman with the export. That's the beauty of that. The actual producer can actually capture the profit. Do you think that's a possibility on the table? It's out there, and I don't think it'll be done because it's good for everyone. So, but we'll see.
So I think it's an interesting. I kind of have 2 answers to that. One, I think it's really interesting to think about that, and the capitalist or the free market economist in me would say, well, if you don't mandate that. That would have to be mandated by the government. Otherwise, if I'm the CEO of an oil and gas company, why would I send 20% to only make $2 when I could send it all of my gas to make $11? So you're talking about wholesale government coming in and regulating a business. And I generally, I have a master's degree in economics. I tend to fall in, okay, let the invisible hand ultimately does win if left to its own devices. Now, I think what we've seen is that you either, and I tend to fall in, we either have to have no regulation in an industry or we have to have 100% regulation. This whole quasi, we're going to kind of control it, we're kind of not going to control it, doesn't work. I mean, it's either got to be like regulated like the fire department, where it's 100% of my tax dollars funds the fire department, and they do a great job. Yeah. Or we let completely the industry run wild, maybe not run wild, but do what the industry is going to do, incentivize them to make as much money as possible, and they will end up aligning with what's best for consumers, because consumers will pay for what's best for them, and interests always end up aligning. So from that standpoint, if you could mandate that somehow, I mean, in a great bubble, I think it would work. How that would actually play out in real life is interesting. But I think what's going to happen, because I think you hit the nail on the head, there's going to be a dichotomy for what does an oil and gas company do if they look down the future and say, if the future is lower energy costs, how do we turn around to our shareholders and say we're increasing revenue every year or increasing margin every year when our free cash flow is going to be being basically, eroded because oil and energy prices are going down. Well, I think you've seen this in tea leaves. Continental, they did two interesting things over the last year. They first came out, or most recently, we'll start with their most recent announcement. Their most recent announcement was they're going to stop drilling in the Bakken, which is up there in North Dakota, Williston Basin, which is incredible. I mean, Continental is owned and operated by Harold Hamm, CEO, probably one of the OG oil men in the business. I was shocked. If this was 15, 20 years ago, he would have probably been the Secretary of Energy if Trump had been elected 10, 15 years ago. I mean, I think he's very much interested and politically, I think his political instincts are great, but he's also a great businessman. And he came out publicly, and Continental came out publicly and said, we're going to stop drilling in the Bakken for at least the time being, because we're not sure if we can make money. Well, 6 months before that, what did they do? They made a huge stink about going in and leasing up 400,000 acres in Argentinian's gas field. So, and you've heard tea leaves from other companies, Double Eagle, big private company, the guys who are making Texas Tech football great. Those guys, they've leaked and they let it leak. You hear something in the media, somebody leaked that. They're testing that. They're market testing what your reaction is. And it got to the media that Double Eagle's looking international for Double Eagle 5. They've had 4 exits from private equity into public companies, all based in the Permian. So if there's anybody's got an expertise in the Permian Basin, it's probably Double Eagle. And they let it leak that they're looking internationally. And Apache has done the same thing. They've come out recently and said, we're actually going to start focusing on our international assets a lot more. Why? Because I think that actually accomplishes what you're talking about, but letting the free market decide. They can have their U.S. operations, which they'll always have their U.S. operations. They'll make margin on it. They'll make some money on it, but their real drivers of profit will be their international stuff. And as long as they can have they can continue to grow internationally, they can keep the same level or even maybe take a slight hit in the United States and still look to their shareholders and say, guess what? We're doing the most fiscal responsible thing, and we're taking care of you, our shareholders. And that to me seems like the free market deciding what the best outcome is versus a sort of a government mouth to hand. Here's what you should do.
That's actually fairly brilliant. Yeah. I mean, this is why I brought you on here, man. I'm not tied into the news and the space. That is actually really brilliant. And it's happening like that. Yes. That is actually happening as we speak, which also it's contradictory to drill, baby, drill, right? I can't continue. I will continue to hammer that out because that's just the personality I am. So that was a campaign hook at this point in time, because our guys are going to have their profits generated in another country in order to achieve the energy efficiency and pricing here. Now, there's also, people don't put this together either. Tariffs, right? I just did this on the last recording I had. Tariffs are very easy to understand. Trump is not imposing a tariff on a foreign country to pay. He is imposing a tariff on a U.S. company importing from that country. So what's happening right now is we have, what is it, 300 billion, 600 billion, $29 trillion. Nobody really knows how much, it's trillions and trillions. But all this money is being gathered up from U.S. importers and being allocated to the middle and lower class. That is called socialism in every sense of the word. There is no way around that. But these tariffs are killing the oil and gas companies right now for steel imports, for tubing, for piping, for miles and miles and miles of steel. This is actually completely against the drill baby drill model that we were taught or told in the campaign. And I think these are causing real problems. So like you talked about, the rig count just continues to drop because it's not profitable. The price of oil isn't efficient for them to drill. It's more expensive for them to buy the materials needed to extract the hydrocarbons from below the surface. These added expenses right now, these are actually really bad. And then in the middle of this, we just, conduct a 28-minute operation to go kidnap a president of a foreign country that's somehow not a declaration of war or an act of war somehow. I can't imagine if like North Korea just came here and took Trump, I'd probably imagine we'd be nuking North Korea the next morning. So there's something fishy there. It's clearly a psyop or some sort of trade-off for something. But then we now have almost $1 billion in Venezuelan oil, 7 quote unquote Venezuelan tankers. What the hell is happening with Venezuela from an oil perspective? Because I can't see it being good for the American producer. Who I see it being good for are the big 6, the big 5, who own the refineries that refine that heavy sour crude. They're going to make a fortune. But I don't know how that helps us to be able to go into Venezuela and basically take over that oil industry. How does that, is that the trade-off you're talking about with Double Eagle and some of these other guys? Are they like, hey, we have land now, go to Venezuela and drill, and that's where you'll make your profit? What do you think is happening there?
I don't think Venezuela. I think that's what's happening internationally. I think all these big companies are looking internationally to say, is there a way to capture the arbitrage internationally? And then you get into the whole, well, now if I sell something in Argentina, what currency do I get? Do I get Argentinian currency? And maybe that's actually better than the US dollar. It's a whole nother can of worms we can go down. But specifically with Venezuela, and this is where I think trying to parse through what President Trump says is really difficult, because he was very clear in his press conference. We went in to Venezuela for the oil, but for 6 months prior to that, we were nuking narco terrorists, theoretically, who were driving on these little boats who looked like they could only make it a couple miles. And we were told it was because they were importing fentanyl. So I would have thought we would have went into Venezuela for the drugs, but we went in for the oil. And he clearly didn't consult with any oil companies before he did this, because he had that big meeting with all the oil companies, and to his face, CEO of Exxon, Darren Woods, said, yeah, we're not really interested. We're not terribly pumped about dumping billions of dollars into Venezuela only for this new Venezuelan regime, whoever it will be, because it doesn't, for all intents and purposes, the U.S. isn't running Venezuela. I know Trump said that, but if we were running Venezuela, I think it might be interesting to actually go in there. But clearly these oil companies...
got one guy.
Absolutely.
The entire regime is still there operating the nation. Like one guy was removed.
So I don't think anybody is dying to invest money in Venezuela. So I think it's an interesting catch-22. I don't actually believe you're going to see that much U.S. investment into Venezuela. I mean, Chevron is the largest operator right now. They got a waiver in the first Trump administration. It was extended during the Biden administration. It has continued to extend during this second Trump administration, but that's only because Chevron is owed, a couple $2 billion, and they're just taking about 50 to 75,000 barrels of oil a day out of there, if only because they're trying to recoup their debt. This is not we're investing money to pull oil out. I mean, Venezuela is extremely difficult. I mean, when I was in college, and this was sort of at the, right before the downfall of Venezuelan oil. So we're talking, late 2000s, when Venezuelan oil, it had been on the downcline, but it hadn't fallen off a cliff yet. And it was well known when I was in college and when I first got into the industry, the smartest engineers in the world are Venezuelan. And the reason is because their oil is so dang difficult to get. It's deep offshore. It's super thick. Every well has to be a steam flood, where you can imagine oil comes in all different shapes and flavors. And so there's the light sweet WTI crude that gets produced in West Texas, which actually, if you were to look at it in a clear glass when it was first produced from the ground, it would look like it's got a greenish hue to it. And then that's one spectrum. Then all the way on the other spectrum is basically like pudding, and really thick pudding that almost is like clay that you could hold in your hand. And if it was hard enough, it would be like a rock. And so you can't produce that. You have to have something more liquid. So what do? You pump extremely warm water, aka steam flood, down into the reservoir. That steam mixes with the sort of the mushy like hydrocarbon, makes it less viscous, and then allows you to produce it. And then you have to strip that water out and do a whole recycling. Well, that process is extremely technically challenged. It's extremely expensive to do that. And so it was well known that Venezuelan engineers in the oil and gas space were some of the smartest in the world, because you had to be in order to work that. Well, all of that knowledge has been sucked away over the last 15 years because the Maduro administration, and I'm no fan of the Maduro administration, don't get me wrong, I do think it's kind of egregious what we did just snatching him out of there, but that's another can of worms we can get down, and Stu and I will always disagree on that. But I think the point is that knowledge and the willingness to spend money by the PDVSA, the Venezuelan oil company, is gone. There's no more money in Venezuela, because the only reason Venezuela was making money was leveraging their oil company to sell bonds to basically do a whole sort of recycling of capital into, we'll sell our future oil, get some money in, and then use that to keep developing. And as long as we keep growing oil production, the train keeps on going. And
But the hedge unhedged.
Absolutely. Or some would call it a Ponzi scheme. But point of the matter is,
they also had 1,000 sanctions from the United States government. Like, you can't expect that's the other thing. They're like, oh, Maduro collapsed the economy. What was he supposed to do? Also, like, you know me, man. I look at everything nuanced. Everything is great. Everyone wants to see things black and white, but there's two parties. There's clearly something in Venezuela. Maybe it's the light uranium that they have, the gold reserves that they have. Major illegal gold trader. With gold going bananas until today, until the 13% drop today. But, there's so many resources in Venezuela beyond oil, and Venezuela happens to be right next to Guyana. Is that oil any different in Guyana?
Well,
or do we not know yet?
Well, it's a little bit different because it's sort of on a plateau. I'm doing my best, offshore geologist impersonation. It's a little bit different on the depositional environment. It's much deeper than it is in Venezuela. And the deeper you go, the more hot it is, and the more heat you apply to it, as we just talked about with the steam flood aspect, that makes it more liquid. So it's a lot easier to invest in. And Guyana is theoretically a capitalist or a democracy. And I use quotes because I don't think anybody knows. The point of the matter is, companies, and specifically ExxonMobil, seems extremely comfortable operating. I mean, you can imagine Exxon basically runs that country.
100%. Yeah. It's not a country. It's a proxy at this point.
Absolutely. So I think they feel extremely comfortable operating off Guyana for those two reasons. They're comfortable with the tens of billions of dollars in the investment, and it is a little bit easier to produce. Deep offshore drilling is not inherently difficult. What's really difficult is when you have to go and steam flood and do all this other stuff that it takes in Venezuela. And they've spent tens of billions of dollars there. So I think the United States would protect their investment. And, there was some chatter. If you go about a year and a half ago, Maduro was moving troops to the Guyanese border. Yes. And he was specifically saying they're stealing oil from us. Yes. And so I have heard people say, well, the reason we went into Venezuela was not for Venezuelan oil, was to protect the investment that the oil companies have made in Guyana. 100%. That actually now makes some sense to me. That seems to connect more dots than we're going to go into Venezuela and try to take their oil. I don't think the market needs their oil because they're not really producing anything right now. Sure, Trump, exactly like you said, he campaigned on drill, baby, drill. And maybe the 4D chess in his mind was, we'll use the narco terrorism as a means to start gathering intelligence there, so people don't think the CIA is just running around there doing what they do.
Which
And
they
then
are.
we can snatch Maduro under the guise of narco-terrorism. And once we have him in New York, we can then say, well, it was actually, we're now here for the oil. The problem is he didn't call the oil companies and really ask them what they wanted. So that's one, I think that's really what happened. But you could say, and I think this is what Stu would say, who tends to be a little bit more of a 4D chess guy than me. I think he would say this probably has more to do with the Guyana locking and making sure that stays the way it is.
Absolutely.
So that I think you're onto something when you talk about what's going on, the Venezuelan Guyana differences, or I don't even know what to call it, because
it's clear the bottom line with Venezuela, it's clearly not to liberate the Venezuelans.
Yes,
okay?
Absolutely not.
That's because if you like the videos that were showed, like Alex Jones was showing footage from Rio de Janeiro, and people were showing, Alex Jones actually showed, he said, oh, we're invading Venezuela. It was a picture from Iran bombing Israel. I mean, it's just so ridiculous. And of course, the Venezuelans in Miami were celebrating because they're not there anymore. But there are multiple factions of Venezuelans who are actually anti-Maduro, who are protesting because they're like, even though we didn't like him and didn't want him, you don't have the right to come get him. I think it was Rand Paul, which now everyone hates Rand Paul. He was basically saying, imagine if another country came in here and took the president, we would be at war before that jet got off the runway. Like, that's just the way so it's deeper than that. And I know that there's another faction that says, oh, it's because Venezuela has the voting machines and they work with it. Like, it's all this like 12-year-old spy versus spy magazine theories that are out there. Like, the reality is, like, if Maduro is like, here's, first of all, we were told not to trust a word he says, but now whatever confession he makes, we're going to take it for gospel, right? Like that's kind of the catch-22. At the end of the day, it was about oil, and I think it was about the Guyanan oil, because Guyana itself has absolutely no firepower. I don't even think they have a military, to be frank. So they are a completely corporate-run entity that is a absolute cash cow that's going to get more profitable over time. And you need that positioning of Venezuela. I think that makes perfect sense to me.
No, to me that makes sense. And I guess
so evil to say that makes sense, by the way. Like, it's such an evil world that we live in to be like, oh yeah, makes sense. Just kidnap a president, drop some bombs, protect corporate interest of America. It's not even American government, by the way.
I know it's
their government never stole anything from our government. They stole from private entities who apparently aren't allowed to fail anymore with poor international relationships.
Yeah, well, it's what we've come to, unfortunately.
It's where we are. The world is so crazy, so crazy. The data center conversation is so much more interesting than Venezuela, because we'll see what lie Venezuela will be told, right? That's because that's how it's going to turn out. Whatever the actual purpose of going down there was, we'll never know. But what we do know is that Venezuela has gotten 0% better for the people since Maduro has been captured, because nothing's changed. Literally nothing's changed there. The only thing that has changed is that we've been stealing tankers and oil for U.S. companies that a foreign government owes money to. Doesn't owe a penny to taxpayers, by the way, not a penny. And they won't pay taxes on that recouped money, by the way, Michael, because it's from a settlement. So no tax. Interesting. What about Canada and Greenland? Because there's obviously resources at play. Canada, you and I have had many conversations, like Alberta, flush with natural gas. There's so much natural gas in Canada, and it's literally the most retarded people in the world that run the oil and gas regulatory body. They're great engineers, really solid Canadian entrepreneurs and drillers up there. But they're so backwoods and just retarded, the way that they limit their own. Like, that country should be so prosperous right now, but they don't have anything. I don't have any gold. I have a friend right now who's buying a massive natural gas field, and they're allowed to drill for gas, but they can't drill for oil. So, and they're buying it for like 12 cents on the dollar. You're talking about hundreds of thousands of acres of fertile, flush land to drill on. Why are we talking about, from an energy guy's perspective? Because politically, I'll handle all that. I'll take that off your plate, Michael. Yeah, I got you. From an energy perspective, Greenland has some, but Canada's flush. What do you see happening here? Would we would we be at an advantage to continue the relations we have now for energy, or would it make sense to merge those two companies? Because honestly, I think in the end, these are plans that were drawn out by global leaders 50 to 60 years ago, and there's no stopping the train. There will be merged kingdoms. And I think Greenland, Canada, America, maybe all the way down to Venezuela will be merged as an economic zone at some point. Not tomorrow, but at some point. So why Canada? Why in the hell are we talking about Greenland?
I think Greenland is more from a critical minerals and a strategic global power point of view. There's not much oil there. If there is oil there, it's not terribly.
It's a little gas. They have a little gas.
A little gas, and so maybe okay, you take over Greenland, you've got a little bit of that gas that's now you can the margins on getting it to Europe are even better. I think it really has to do with the critical mineral space. I think talking about what's going on, and we haven't really mentioned the word China in this conversation, and I think they're a kind of a force that's waiting in the back because I think a lot
that's why we're in Iran right now.
Yeah, exactly.
Sure.
Great. But
that's also why we backed out of Afghanistan, because remember, Iran had sanctions on the dollar, and Afghanistan is right in between them and China. So when we had that debacle in Afghanistan, what we did was we removed all military force that could stop the flow of oil from Iran to China in exchange for yuan. And that's exactly what happened after we pulled out. So they've been getting free flow Iranian oil ever since we pulled out of Afghanistan, which is why we're in Iran again.
Yeah, it's
that and Israel, right? Like Israel wants a new puppet in Iran. Like that's also very obvious to see.
No, absolutely. I do propose, as a fantasy football guy myself, I propose we trade Minnesota for Alberta. Does anybody say no?
I'm in. Count me in.
We've got two of us on that. But
I'll put cash on that deal and a player to be named later as well.
Absolutely. I mean, we'll pay. We'll pick up the salary for Alberta. We'll carry whatever big contract that we need to pick them up.
We'll throw in a few Somali daycare centers. It'll work out perfectly.
Absolutely. And we'll give you San Francisco. We'll carve out San Francisco even, because all the good tech companies have left Austin, so we're not even worried about that. I think you bring up a good point about Canada, and I actually think an interesting Canada is actually an interesting footnote in the Venezuelan conversation. So I think it flows very nicely, if only because Venezuelan, even after the steam flood, it produces a heavy oil. And that heavy oil is great to be sent to the refineries in the Gulf of America down there in Galveston. Most people don't realize this. Most of the refineries we have in the United States take heavy crude. Yes. They're actually not designed to take 60%. The light sweet crude. Exactly. Yeah. And where are the two places in the world heavy crude is produced? Well, one, Venezuela, and two, Canada. And what happened right after we snatched Maduro? Who showed up to meet Mark Carney in Canada? Xi Jinping. Why? Well, I think what Canada thought was, oh no, the United States now, what little oil exports that we have, and don't get me wrong, they hate the oil industry, but at the end of the day, they look at their balance sheet and say, oh, well, we're making money from oil. We probably shouldn't stop that. I mean, at the end of the day, everybody is money driven. Now they can have policies to limit it, but they still export a lot of oil to the United States, and that makes up a good, substantial revenue stream for them. If all of a sudden the U.S. is going to start buying or is going to start having access to Venezuelan oil on the cheap, well, guess what? Canada's energy industry is absolutely done because they have nowhere to send their oil, because you have to think about, you have to put it on a tanker and send it across the sea, across the Pacific Ocean. Oh, good luck on that. That's expensive. What are you going to do?
If it gets there, we may confiscate that because it'll be a Chinese tanker.
Absolutely. So I think Canada is in a really precarious situation. And me and you, I think, we sounds like we came to the conclusion Venezuela is the Venezuelan oil part of the Venezuelan Maduro capture is probably a big dog and pony show. It probably has more to do with Guyana. But even if we do, say in a couple years, start pouring money into Venezuela, oil prices rebound a little bit, and the big majors start dumping money into them, that only hurts Canada, because Canada is now losing their biggest buyer of crude oil. And then what do you do if you're the Canadians? Do you just shut the whole industry down? Do you make deals with Xi Jinping in China to start having better trade relations with them? Exactly what you said. What does the United States do in reaction to that? All of a sudden, Canada is now working with our greatest enemy. If we are going to create a new economic trading bloc that's, new version of NATO that includes Canada, well, we can't have them then dealing with what is theoretically our greatest ally. It can get real squirrely coming up here. And I think Canada has done a massive disservice to themselves because they followed the EU in this just over and burdensome regulation. I think your experience and your friend's experience working in Canada is unfortunate, and it doesn't need to be that way because they are blessed, as you said, with a huge amount of both oil, gas, and critical minerals. They just don't have the gumption nor the political will to actually go get it. They've got smart folks. They just don't have the political will to go get it.
Yeah, I couldn't agree with that more. And I think it's all dog and pony show. Again, I think anybody listening or watching out there, just go to Google Images and type in Club of Rome map of the world. US, Canada, and Greenland are combined. Go to the Technate of 1940, which Elon Musk's grandfather was part of Technocracy Inc. in the 30s, by the way. So technocracy is not a new word. And their map was Greenland down to Venezuela. I think that's playing out before us. So they'll still have, they'll still be called Canada, but it'll all be one big economic zone. The World Economic Forum identified the exact same 10 kingdoms, which is very biblical, by the way, that Rome proclaimed 10 new kingdoms. If you're a biblical person, that should ring some bells for you about Revelation. But I digress. World Economic Forum, same thing, 12 economic zones. One of them includes Greenland, Canada, and America, because it does create that combined economic power. Like if you actually put Canada and America, which I'm against, by the way, like I'm saying this because I look at both sides and I try to talk things through and look at the nuance. I think sovereign nations should remain sovereign nations. Like that's been around a long time now. Not as long as you think, but a long time. And I don't think Greenlanders want to be Americans or Canadians want to be Americans. I think they want the prosperity we can bring them, but can we bring them? Like we're $38 trillion in debt. Do you see where this is all going? Like it's all so confusing is where do we, no one's buying our treasury bonds anymore. Everybody's stacking gold. I think gold can't be overlooked in Venezuela. They have very good gold reserves. There's gold, critical minerals and gold in Greenland as well. There's certainly gold in Canada, along with minerals, rubber. That's one of their biggest export. Nobody talks about, use it for everything. Man, it's just so confusing to look at this where we are right now because we have no idea. And of course you can Michael, we can go on X right now and there's like 600 people who totally know exactly what's happening behind closed doors.
Absolutely.
Of course. I mean, I read the 5D chess book. I don't know that there is 5D chess. I think that is a perfect ploy to basically say we're going to make it super entertaining and distracting while we implement plans we had from 75 years ago. That's how the world really works. Politicians are actors on a stage to entertain you and persuade you that whatever the next thing is, that you accept it and cheer for it. At first, you have to fight over it for a while, though. You got to argue about it and debate, and eventually it just happens. Like nothing has counteracted that theory or thesis in over 100 years. But I think we're looking at the end of a central banking era. Like the IMF started building crypto rails 4 years ago. The IMF. So there's this big theater being played out right now, and I think that when we combine these together, which is probably going to happen, it seems so radical to think, but that's the way the world is. In the end, I think the American energy sector is going to pay the price in the short term for any of this stuff. And this is where the world falls short. When I was in oil and gas was raging under Biden, I was like, I'll go fill up my tank anytime. I make a fortune off this stuff. It's so counterintuitive to a general economy. But I think that this international, I love that you brought that to the table, just thinking that these guys are looking internationally to bolster shareholder return, which for an American corporation is the only actual stipulation of a CEO. There's nothing. All they have to, their only job is shareholder value. So if they have to do that internationally, then we're watching the government open the doors for private companies in the international space to be able to get sweetheart deals or power projection into those nations to open the doors for these private companies. Some people may view that as exciting. I actually view that as very scary. That is a fascist type environment where the government is paving the way for private corporations who are funding elections for politicians who make the calls. This is very reminiscent of the 1930s and 1920s. Where do you see this all ending? This has been an interesting conversation. I just wanted to go through the natural gas market, but every time we hang out, man, it ends up going all over the place. And I'm the main conductor. But today you brought me down rabbit holes. So it's on you today, Mike.
I think it's all to say, where does it all end up? I think it's all intertwined. I think you can't talk about natural gas without talking about the hyperscalers. And then when you start talking about the hyperscalers, you can't talk about the government involvement with that. And then you start talking about the government involvement. Well, now we got to talk about what's going on in Venezuela, because that then ties into what's going on. I mean, so it's all intertwined. I think from a natural gas perspective, I think we've entered as you mentioned, and I'm going to completely agree with you, and I don't like agreeing with people, but I'm going to do that in this case.
Especially me, man.
No. Love agreeing with you. I don't want, if Stu's listening, not really. I prefer to disagree with Stu, but unfortunately, you and him are right directionally way more than I am. So a lot of times I just have to sit back and say, you know what? You got it right. You guys got it right. I got it wrong. I think natural gas is entering a new era, at least for the next 5 to 10 years, of bullish sentiment over the long term. Again, I think I started this conversation out by saying it's the first time in my career that just the overall sentiment, or as the youngins say, the vibes of natural gas are bullish, and the oil sentiment over the long term is actually fairly dead. Now, from an oil perspective, it's more of a pure commodity than natural gas. Natural gas is a commodity, but I could have that, or we could have that argument in another conversation about why it's true. It's a kind of a commodity. It's not really a commodity.
Almost its own asset class in this new era.
Absolutely. Oil is still a commodity, so it's going to be cyclical. It's going to fall when there's a lot of supply. It's going to then rise when there's not much supply. Rig counts are falling, which means supply is going to eventually fall off the table because of the decline curve, and prices will eventually rebound. It's just this big cyclical nature. So a lot of what I spend my day job on is trying to figure out where we are in the cycle, and then how do we place capital in that cycle to actually make a return. That's a plug for my services. You can check it out at sandstone-group.com. But from a natural gas perspective, I think it's very interesting, because I think you're going to see prices continually to rise. And if you just look at a natural gas chart, I mean, I think a lot of people are like, oh, you can't, the charts don't tell you anything. The charts will tell you everything. You just have to look at it over a long enough time frame. You look at it the natural gas over a day, it just looks like a bunch of squiggly lines, and there you can glean no from it. You all of a sudden now go to a week, you go to a month, you go to 3 years, you go to 5 years. Now all of a sudden you start seeing long-term trends. Then you start overlaying that with news, with other data points like where we are from natural gas storage. You start to put this story together, and that story is where we started. Data centers and off-grid use of and needs for energy is going to drive energy prices, specifically natural gas prices, higher. And I think there's going to become a reckoning with that, because I think you're going to see, I think Microsoft came out a few weeks ago and said, we're actually going to just be buying energy from the grid, and we're going to subsidize your, the community's electrical bills, so your energy bills don't go up. Because I think that's a big concern about all these people. People don't mind development, but if you're going to go build a data center next to my house and it's going to double my electricity, well, I don't want you next to me, because I like lower energy costs. So I think you're going to see a lot more of those deals get made, where big companies like Microsoft, Amazon, OpenAI, Grok, they're all going to come in and they're going to want to build data centers, but they're going to have to make a deal with the community to either buy energy from the grid, which is a challenge because the grid is always fairly tight. There's not just that much excess electricity hanging out there. And if it is, you can't put it anywhere. We just saw in this freeze in Texas, batteries didn't work at all. They work on a micro scale. I think if you have a battery hooked up to your house and can have a little smart grid going, whether or not the government can spy on you that way, that's a whole nother can of worms. But in theory, that works fairly well from like a small individual perspective. And like most things, it works at the individual level. You try to expand that to a larger and larger subset of people, it ends up failing, especially when you get to the big government size. So talking about like a whole grid, batteries are 50-50 unless the technology gets better. So where does that leave us?
It is.
I think it leaves us in a position where, if you're in the financial markets, get ready to get bullish on natural gas. If you're in the data center space, someone's going to make a lot of money. And it's like the conversations we would have. Someone's going to figure out the oil to Bitcoin to life cycle. They're going to figure out how to actually make it work. I think there's a lot of companies out there that think they've got it down. I think you guys actually have probably the best model I've heard of, where you actually are letting people participate in Bitcoin versus just trading energy for gas. But someone on the oil side is going to figure this out and get really rich off of it. And so the question on natural gas is, what happens? Someone's going to figure out this on-grid, off-grid. Where do we send our energy? Or does Chevron make direct deals? And as you know, Exxon, Chevron, all these producers, do they make direct deals with these data centers? Do they buy it from the grid? How does it all work? Someone's going to figure it out. We'll see a new paradigm happen. But I think at the end of the day, it's going to mean natural gas prices rise over the next 5 to 10 years. And then we'll see how that shakes out from an electrical standpoint.
Yeah, and they're selling it to us in that exact capacity, right? Like the move that Microsoft is making is not a repercussion of political pressure. There actually was very little around that scenario. It's a preemptive PR strike to say, hey, listen, we're the good guys. I know we're building your surveillance state and your digital prison, but we're the good guys, and we're going to subsidize your energy costs so you don't feel the pain. And you're seeing Meta commercials coming out. I saw a commercial, this blue collar guy, he's like, I used to have to drive 2 hours to go to my work site until Meta came around. Now I've got a steady job. What he doesn't say is whisper, like, for the next year and a half, and then you're fired. Like they're already doing the PR campaign around these data centers. And I can't help but think that the Hegelian dialectic is playing out throughout the entire globe, where the Canadian government has been made to look so foolish that even our foolish government will be better than their foolish government. So they'll want us to come in because those are the best places you can build data centers, direct to the source of energy. They're cold. They keep all the units cold. Mexico, same thing. Ridiculous. There's a Jewish lady running a Catholic nation. That is just very strange to me. And that's falling apart. Cartels are running the place. So many things are happening. But all of these countries are going to end up being points of usage for AI and data centers that are interconnected throughout cables throughout the entire world, or Wi-Fi through Starlink. At the end of the day, I think, Michael, watch the Hegelian dialectic. I think it tells you a lot what's happening. And I think you're dead on. I think that what we see in the future are, by the way, I think the biggest Bitcoin treasury companies in the next 10 years are going to be the oil and gas companies that get wise, because I'm talking to a few right now. And when you break down the mechanics of flare gas and you're like, hey, you're losing X amount of millions, you could turn that into like 30 million in the opposite direction. When they start catching on to that and seeing it, you're going to see these guys just stacking Bitcoin with what they used to burn. And then you have a whole new paradigm of energy producer. You know, the whole corporation model changes there, but it's all feeding this surveillance grid. And there's no way around that. And Michael, your off-grid, smart grid, a couple fine examples. I've had a couple of people come to me and say, hey, my homeowners association sent me a letter and a drone shot of my house saying that my pool was outside of specs, was one of them. And the other one that they needed to move where their garbage cans were placed. Totally unsolicited. Your HOA is accessing drone footage. So they definitely know where your smart grid is. And that will get worse with AI, but we will be sold that it'll be so good for us. It's going to be so good, Michael. Everything's going to be amazing. You're not going to have to work. You're just going to need UBI through stable coins, CBDC. And eventually you're just going to be able to sit around and watch video games, man. It's going to be amazing. Kind of sounds like Revelation, where John saw that the world marveled after the beast. Like that's kind of what we're going into. In the process, in between then and there, you know, you guys should all be paying attention to Energy News Beat. Again, these guys go through the energy market. If you think Michael's entertaining, him and Stu, who are they're friends, but they're kind of polar opposites. I know them both personally, and they're both good guys, but their show is so entertaining over such a doldrum, boring topic as the energy space, that it is the most entertaining hour you will spend when they put new episodes out. When do your new episodes come out?
So we record Sunday nights and Wednesday nights, and then they'll drop Mondays and Thursdays. So we actually had just one drop yesterday. We talked a lot about what's going on in the gold and silver markets, and a little bit of sort of actually what that ties into natural gas. I actually had an article up that I've referenced that we ran on energynewsbeat.com, which had a little bit of that yesterday. And then Stu and I will do about 2 to 3 long form interviews a month. We usually do them separately. We actually just got in contact with the CEO of CNX, which is the second largest natural gas producer in the Marcellus Shale, which is the largest natural gas field in the country. So we've got some cool stuff coming up about there. So I appreciate you pointing people there, and yeah, we're just available to find everywhere. Really, really appreciate it. And to be honest, I'm sure a lot of our followers cross over, because I think the stuff that we sort of kind of walk up to the line to, you take our stuff and then blow past the line and actually tell people what they really need to know.
Yeah, it's a good handoff. It totally, we don't even talk to each other that much, but it ends up happening that way. But guys, check out Energy News Beat. Great show, great guys. It's entertaining. That's the one thing I love about you guys. You literally make something that, like, I'm a backdoor guy in a hoodie economist. I'm not an economist, but I'm just some guy who watches trends and picks them out. And I'm usually pretty accurate over a long enough period of time. But you guys are diving into market mechanics, which most of those shows are boring because they try to stay in the CNBC, don't say anything that's controversial and scary. You guys, like, especially Stu, he goes into everything. I love Stu. Stu makes his own bullets at his house. I love the guy.
He does.
So
Absolutely.
yeah. No, it's so good. Thank you for joining us here, Michael. I can't wait to get this episode out. Again, guys, Energy News Beat, give it a shout out. Are you guys have social handles for the show as well you want to plug?
Just hit us up on LinkedIn, and really www.energynewsbeat.com. That's our website where we draw all of our news from. Stu's incredible job of making sure that website really stays up to speed. If you really want to be at the tip of the spear when it comes to energy news, check that out. Substack, energynewsbeat.substack is the best place to go.
Awesome. Well, Michael, thank you so much for joining us here today. God bless you. God bless this country. We'll see you again next time on the Rice Report. Have a good one, everybody.